The next trillion-dollar wave in technology is not just happening in the cloud. It's happening right here in the device in your pocket, on the laptop on your desk, and in the silicon powering your car. Edge AI, artificial intelligence that runs locally with zero latency and complete privacy, is the defining investment theme of 2026. Today, we are breaking down every single layer of this value chain, from raw silicon to end-user software, with hard data, real numbers, and the company's position to win. Let's get into it. Let's start with the macro picture. The Edge AI value chain in 2026 is a sequential, 5-stage architecture. Every dollar in this sector flows through these exact gates. At the absolute foundation sits IP and chip design. This is where ARM's ARMv9 and C5's RISC-V define the core instruction sets. They license this architecture to fabless designers like Apple, Qualcomm, AMD, and MediaTek to build NPUs, neural processing units. But a design is just paper until it hits the advanced Foundry layer. TSMC, Samsung, and Intel Foundry race to manufacture these designs at 3nm and N3 nodes. Crucially, these logic chips must be co-packaged with next-generation edge memory, specifically LPDDR5X and LPCAMM2 from Micron, Samsung, and SK Hynix. These components are then assembled into edge devices by OEMs, Copilot AI PCs from Lenovo, Dell, and HP, alongside Apple Intelligence MacBooks and AI smartphones. To make the hardware usable, the OS and AMP, AI platforms take over Windows Copilot Plus Runtime, macOS Tahoe, Android Gemini Nano, and iOS 18. Finally, this infrastructure supports local AI applications at the top of the chain. From local LLMs like Meta's Llama 3 and Allama, to on-device creative tools from Adobe, and real-time endpoint security from CrowdStrike and Palo Alto Networks. The ecosystem is fully built. But why is the hardware demand exploding exactly right now? Look at the financial catalysts. 3 structural catalysts are creating a perfect storm for this supercycle. Catalyst 1, the violent AI device penetration wave. Global AI PC shipments are not just growing, they're taking over. From 38.1 million units in 2024, they're projected to hit 143.1 million units by 2026. We are watching market share penetration jump from 15.6% to 54.7% in a 24-month window. This ASP expansion is driving massive hardware margins across the supply chain. Catalyst 2, the cyclical recovery. Look at the sine wave chart. We have officially passed the inventory cleansing phase and the cycle bottom. The legacy installed base from the 2020 pandemic is aging out. Local AI applications are creating a pull-forward effect, compelling enterprise users to upgrade their hardware earlier than anticipated. But Catalyst 3 is the CFO's ultimate weapon, the OpEx to CapEx shift. When you plot the total cost of ownership, relying on cloud API calls is an operating expense that scales infinitely upward. Buying a local AI PC is a fixed capital expenditure. The two lines cross at exactly 5 months. After month 5, local hardware pays for itself, while giving you 100% offline privacy and zero latency NPU speed. The corporate math is undeniable. So, who holds the pricing power inside the silicon? Welcome to the Moat. In the core architecture layer, ARM is the absolute monopolist. They control roughly 99% of the mobile IP share through their ARMv9 architecture, levying royalty fees on almost every mobile device globally to maintain a staggering gross margin of over 90%. Their only real structural threat is RISC-V via C5, an open-source ISA pushing deep into IoT to bypass those exact licensing costs. In the fabless SoC matrix, the Big Five are at war. Apple is the closed ecosystem king. With the A18 Pro and M5 Pro, they own 100% of Mac and iPhone share. Their unified memory architecture is an impenetrable moat, allowing them to extract 49% gross margins during this premium supercycle. Qualcomm is the AI PC disruptor. As the lead partner for Windows Copilot Plus, their custom Orion CPU and Snapdragon X elite chips dominate power efficiency, tops per watt, yielding 54% margins. AMD is the x86 challenger, holding 38.1% of x86 market value. By integrating NPUs from their Xilinx acquisition into Ryzen AI Max Plus, They maintain traditional laptop dominance at 55% margins. Intel is the incumbent giant. Despite holding 61.9% of x86 volume, their margins have compressed to 22%. Their Fovero's 3D packaging and OpenVINO software keep them relevant, but this is a volume turnaround play. Finally, MediaTek is the mobile AI powerhouse. They hold the #1 global smartphone SoC share by volume. Their Dimensity 9500's all-big core design is built specifically for on-device LLMs, driving a 46% margin as they expand into automotive via Nvidia. While the NPU war is just beginning, the war for heavy, discrete desktop graphics is already over. The discrete GPU market is a brutal lesson in execution. From a peak of 73.9 million units in 2010, the market hit a cycle trough of 30.8 million in 2023 before rebounding. According to John Petty Research, out of the roughly 45 million units shipped in 2025, AMD Radeon experienced a total collapse, plummeting to a historical low of just 5% market share. Nvidia GeForce RTX did the exact opposite, surging to a staggering 94% to 95% dominance. In desktop graphics for heavy local AI, Nvidia won completely. Period. But Nvidia, Apple, and Qualcomm are entirely at the mercy of one physical bottleneck. Behind every advanced AI chip lies a $25 billion moat, the massive capital expenditure required to build just 2 nanometers or 3 nanometers fab. But a logic chip is only as powerful as its data supply line. Edge AI demands high speed, low power memory, without advanced packaging integrating LPCAMM2 or LPDDR5X RAM. The system instantly bottlenecks. If the logic chip is the brain, then RAM is the bloodstream, ensuring stable, smooth runs for local models like Llama. In this Foundry battleground, TSMC is the execution machine, controlling 61% of the market with unrivaled yields. The default choice for big tech Samsung holds 11% while struggling with yields, while Intel holds just 5%, betting their future on the 18A node. Yet, look at the map. Over 90% of leading-edge logic capacity is concentrated in Taiwan. This vulnerable supply chain is exactly why the US CHIPS Act is pouring massive subsidies to de-risk the chain. $7.9 billion to Intel, $6.6 billion to TSMC, $6.1 billion to Micron, and $4.8 billion to Samsung. Now, let's look at the companies controlling that $190 billion data bottleneck. Memory is the bloodstream of edge AI. The total addressable market for memory and storage is expanding rapidly, projected to hit $190 billion by 2027. This is a capital-intensive model, and right now, structural shortages are driving massive margin expansion. SK hynix is the AI cloud memory leader. They command 62% of the global HBM market. As Nvidia's primary HBM3E supplier via advanced MRMUF packaging, they extract a premium monopoly gross margin of 79%. Samsung is the scale and damp edge giant. They have regained the #1 volume position with 40% plus total draw market share. They are the dominant supplier of LPDDR5X for global smartphones and pioneered OPCAM form factors, securing a 61% margin through unmatched capital scale. Micron is the efficiency challenger. They leapfrog competitors with 24 gigabytes HBM3E chips that consume 30% less power. Crucially for edge AI, they were first to market with LPCAMM2, which lowers active power by 61% for AI PCs, driving a record 78% gross margin. Finally, Western Digital is the data storage anchor. With 15% plus enterprise SSD share, their high-density TLC/QLC drives are vital for long-term retention of massive parameters for models like Llama 3, maintaining a 50% margin with strong pricing power. We know who prints the silicon and builds the memory. Now, let's look at the actual volume being shipped to consumers. Smartphone markets have entered a new era of AI-driven growth. After bottoming in 2022, shipments are climbing toward 1.26 billion units by 2029. The real narrative here isn't just volume, it's the concentration of value. Samsung and Apple continue to lock down the premium tier, effectively creating an AI moat that mid-range competitors struggle to cross. For vendors like Xiaomi and Transsion, the game is now about scaling AI-like features to emerging markets, proving that the future of smartphones isn't just hardware, it's ecosystem stickiness. If smartphones are recovering, the PC market is experiencing a violent, AI-driven revitalization. After the pandemic correction, shipments are accelerating toward 315 million units by 2029. The Copilot PC standard has triggered a massive commercial refresh cycle. Lenovo, HP, and Dell are leaning into deep enterprise channels to capture this fleet upgrade, while Apple's silicon-based Mac continues to dominate pro workflows. With over half of all shipments projected to be AI-capable by 2026, the hardware is the AI platform. The OS market is the ultimate proxy for platform lock-in. Android peaked at 45% in 2024, but is projected to drop to 37% by 2026 as other global variants rise. Windows has stabilized its long structural decline, holding at 30% in 2026 thanks entirely to the Copilot Plus AI PC launch. Meanwhile, Apple's iOS ecosystem lock-in keeps it durable at 17%. The total operating system's market size is expanding to $54.2 billion by 2030. This OS shift sets the stage for the holy grail of this entire cycle, the local AI ecosystem. Local AI is a fundamental shift in how computing architecture works. It operates like a conveyor belt of intelligence. At the foundation sits the core models. Thanks to model quantization, compressing models to INT4 or INT8, we can now fit massive neural networks directly into local unified memory architecture without cloud dependency. On PCs, open-source LLMs like Meta Llama 3 and Microsoft Phi 3 deliver high-performance, reasoning optimized for 10 to 32 gigs of RAM. On mobile, Google, Gemini Nano, and Apple's foundation model provide personalized, context-aware AI directly on the smartphone. To bridge the gap between models and silicon, execution engines like Windows Copilot Runtime, ONNX, and Apple Core ML optimize AI performance specifically for NPUs and M-series chips. This enables consumer tools like LM Studio and Alma to run complex models with a single click. It powers local generative AI, allowing Stable Diffusion to generate images locally or Adobe to apply NPU filters instantly. It powers endpoint security, where CrowdStrike Falcon and Palo Alto Cortex XDR analyze threats in milliseconds entirely on the device. Zero latency and 100% privacy are the primary competitive advantages of local AI. We've mapped the chain, the bottlenecks, and the software. Now, let's look at the ultimate 2026 investment watch list. When we look at the top 10 edge AI hardware stocks to watch in 2026, we aren't just looking at a list. We are looking at the power map of the entire supply chain. Holding the silicon fortresses are TSMC and ARM. When every AI chip must pass through TSMC's advanced foundries or utilize ARM's core architecture, they possess absolute pricing power. That is exactly why the market is willing to pay such a steep premium to own the ultimate infrastructure of this decade. Next is the data bloodstream, featuring SK Hynix, Samsung, and Micron. With SK Hynix leading the HBM3E charge and Micron pioneering LPCAMM2 for AI PCs, their valuations look incredibly attractive when you weigh them against their explosive earnings growth during this supply shortage cycle. Finally, the experienced architects, Apple, Qualcomm, AMD, MediaTek, and Dell. They don't just sell components, they sell ecosystem lock-in. Apple and Qualcomm are leading the charge with Apple Intelligence and Copilot Plus PCs, while AMD is demonstrating the most aggressive earnings growth rate on the board. The market places a premium on this group because they are directly turning AI into an essential daily tool for end users. In short, the real money in 2026 will flow to those who control the infrastructure, the data supply, and the ecosystem lock-in. Warning, please note, all data in this video is for analytical purposes only and does not constitute financial advice. Thank you so much for watching. Don't forget to like and subscribe so you don't miss the next big thesis. See you in the next one.